Hey everyone, this is Ben from Cheddar Flow for our weekly recap video, and a pretty big update we had on our filters feature. By the way, you can look through here on the right. We have a ton of new filters now that you can add, and I'm actually going to be using them today in the weekly recap video for you guys to check out how I kind of use them and how I kind of scan for tickers. But really, I like using all of this, makes it way simpler. So you're going to want to check this out. If you don't have the platform yet, we have a free trial, and also right now, we have our sale going on for 25% off. So this is the best time of this season to buy Cheddar Flow, or just try it for free. Again, if you don't like it, you don't have to use it after the week's over. So by all means, please check it out, especially with these new filters we have on here, and we'll hop right into it today. So for our first ticker today, it's going to be the VIX. This is the volatility index, basically tracks volatility for the S&P 500, and this one has been heightened for a bit now. However, I'm going to use our filter, like I said in the intro today. I'm going to filter out the ones that I think are the most useful to me as a trader. Remember, not all of these prints that are coming to the tape are going to be useful. They are unusual because they either have a lot of premium in them, or they have a very far out of the money strike, for example, or it's a close expiration. However, a lot of these aren't as relevant. So I'm going to filter it for over 200,000 premium on here. And then what I'm also going to do is I'm going to look for out of the money contracts. So this is the other filter that you could add down here. There's other ones that I also add for stuff, but I'm just going to keep it simple to start it off. Click done on there, and then those prints will come up. So basically, for the prints that I looked with the filters on there, we have a 66% call flow to 34% put flow. And there's some very interesting prints that actually came on the tape that caught my eye. The first one being this 80 call for the end of April with 1.3 million in premium. So this one is very interesting because 80 is very far out of the money. Also, we have another 40 call right here. This one is also far out of the money. And again, not as quite far as 80 calls were, but it still is far out of the money, and it's for 323. So again, that is coming up within the next week roughly. So these are very, very bearish prints for the market, bullish prints for VIX, because remember, they are inversely correlated to an extent. But these two caught my eye big time when I looked at them. This one is a put that they also added, so this is probably a spread that they're playing on both of these orders. However, it is unusual to see both these 1.2 and 1.3 million dollar prints along with all of this out of the money bullish flow for the VIX. We have a 40 call, another 40 call, 30 call right here, and this is a lot of premium going into them. So definitely something to watch out for. We have an 85 call over here for a block order. This one was an opening order because we had that 3,000 volume to the 30 open interest. So this one is a very, very far out of the money print. So a lot of those that are happening here, not as many bearish prints. I guess this one is kind of, but again, not super far out of the money, and it is a further expiration. So the stuff that really concerns me in terms of the market potentially having downside are these two right here, and then also these that add to it. So I'm going to look at the chart right here, and I actually had something drawn out. Basically, the highest the VIX has ever been is 96, and this was in 2008 and 2009 when we had the recession. And if you draw a trend line across from where we were COVID, this was COVID by the way, we actually have a very strong resistance in the 80 to 83 range on the VIX, which is interesting because the strike they chose here was 80. The strike they chose down here was 85, or somewhere around here. Well, it's 85 right here. That's interesting because this is the top of this range that we're trading within. Remember, this is the bottom of the range. This is the top of the range. It'd be very interesting if we actually were able to get up there. That's a very, very difficult thing to predict, especially this early, because that would require a lot of volatility, a lot of downside in the market as well. So this is a very far out of the money bet, obviously. So this is not something that is like set in stone, like there's a good probability of happening. It is a high probability of it not happening. However, if it did happen, somebody that maybe bought these calls is hedging a very long term position that they may have in their portfolio, and they need to hedge all of that by picking something this far out of the money, because in the case that the market did tank and we did fall, or if we did rise all the way up to here, they need to protect their capital, and they maybe see an opening here that shows danger. So that's kind of where they're getting this for right now. If we look on the daily really quick here, we did have this upward channel that's going right now. So basically this blue line right here is the bottom of that upward channel, or I guess wedge in a sense, upward wedge. This is the top of it here, and it's been trading within it so far. We almost touched the bottom. Wouldn't be surprised if we do touch the bottom this week. And then we also have the top right here. So if it breaks out in either direction, whether it be downside or upside, it's going to set the trend in that direction. So you're going to want to look, maybe draw this out in your own charts, because this a break of above here is going to set us up for potential 50s, and a break below here probably stays just around this range and maybe falls a bit more. So definitely something to look for in the future here. So the second ticker I want to talk about here is SPY. This one is very, very bearish so far. And you can see up here, 96% to 4% in terms of put to call flow. I have this filtered for over $1 million in premium because I want to see what the whales are kind of thinking here. Not just random, maybe retail buying into it or just like small, unusual orders. I want to see what the big players are doing here. And they're very bearish on this one. And it's not only bearish, they're bearish near term and medium term. So the reason I say near term and medium term is we're seeing a lot of expirations within either March, April, or May. So a lot of these 414s, we see 520 for here. We saw another 314 right here. So again, that March through May is very, very bearish so far. Just looking through some of these prints, we posted on the Twitter account today, the $8.3 million in premium print, and another 8.3. So this was over 16 million in premium just for these 401 strikes. So that's very bearish, first of all. Other ones here that are notable, we have the 1.0 million for 405, kind of similar to the other two up here, just a little bit less premium, still quite a bit here. 390, this is even further out of the money. However, this one is for June. Then if you go down here, we have a lot of these 415, 405, 420s, just millions and millions in premium going into those. So very scary if you are a bull on SPY, just because of how bearish these are. And we even see stuff like 360. This is far out of the money, very far. The spot price is 426, and they were buying 360 strikes for the 414, so April 14th. That's far out of the money, and considering they put 2 million into it, it's pretty crazy. So definitely something to watch out for because of how much is going into these puts. Just looking through all these, another 8.9 million, 4.5 million. There's just tens of millions in dollars going into puts from this past week. So you got to be careful here. This is telling you got to be careful, and you could even play the downside, honestly, at this point, because we are in a bearish phase right now for the market, in a corrective phase. So any of these bounces right now are possible to be shorted with good risk reward. Another print right here that's just crazy, 415 strike for the quarterlies for 331, so March 31st. And he had almost $13 million in premium on that. That is a huge bet that they're putting in there. So just crazy. Another 401 right here for 10.8 million. This 401 strike is actually very interesting that a lot of people are picking this. So definitely watch this level if we do reach it, because this may actually act as a support, roughly 400 to 402, because we're seeing a lot of those 401 prints and 400, 402 kind of things. So definitely watch if we do hit that level for a potential bounce. Whether you want to cover or not is up to you. But a lot of these you got to be careful with. 7.7 million over here, 6.1 million. So just looking through all of these, I have actually never seen bearish flow like we're seeing right now. So it's pretty incredible. Even during COVID, it wasn't like this, just because there was a lot of back and forth. Volatility was very high, so there were a lot of calls and puts. But in terms of singular orders that have been this big, this far out of the money, this is by far taking the cake for it. So definitely a warning sign to everybody. Tread with caution going forward here. Definitely look at the flow this week and next week. The flow is going to be the tell-all, basically. We want to see if these orders are continuing to hit the tape, because that shows that there's potential for more bearishness, or maybe we're around a bouncing zone and they want to buy more calls. Call side is not very bullish right now. So definitely look for this in the future right here, because this is telling us kind of what's going to happen in the future right now. And yeah, you'll get a good sense of that. But anyways, thanks for watching the video today. And yeah, we'll see you guys in the next video.